5G smartphones.
We got a very busy week of earnings reports. You can see them right there. More than 1/3 of the S&P 500 is set to report. Phil LeBeau has a look at what to expect from Tesla, which reports after the bell today. Phil.
David, we're looking for more color regarding a number of issues. Do they give better delivery guidance for the remainder of this year? Some people are saying, look, they could tell the street, we may deliver over 850,000 vehicles. Do they do that for us? And the other thing that people are going to be focused on, what's happening as far as their capital expenditures. As you take a look at shares of Tesla, keep in mind that they've got 2 gigafactories that are being built right now. They've got one in Berlin, or just outside of Berlin, and they've got another one just outside of Austin, Texas. This is important because this speaks to the future, the growth for this company. And in terms of the gigafactory in Texas, that is scheduled to open later this year. Remember, that's where they're going to build the Cybertruck. It's also where they're going to build the Tesla Semi. And it's coming along quickly, and the question is, will they actually be able to produce vehicles out of that plant by the end of this year? Adam Jonas with Morgan Stanley, who is widely followed when it comes to Tesla, put out a note last week about what to expect from Tesla this week. He wrote, we expect the narrative around Tesla for the remainder of the year to be one word: expansion. No doubt that'll be a question not only from Adam Jonas, but a number of the other analysts tonight on the conference call for Elon Musk. What is next for the remainder of this year for Tesla? And then over the next couple of years, take a look at shares of Tesla and Volkswagen. The reason we're showing this to you guys is, yes, Tesla has had a heck of a run in the last year, up, I think, 400%. But look at Volkswagen and what it's done in the last 6 months. And we're starting to see other automakers, in terms of their stock, be a trade that over the last 3 months and 6 months has, in some cases, outperformed Tesla.
Yeah, well, GM and Ford, too, up 40% versus 4.5
Sure.
for Tesla this year. But, of course, $708 billion market value for Tesla is still almost 10 times GM. Phil, you know, longer term, obviously what you're talking about, many people will be the key focus. But I wonder, do we expect them to ever talk about their goals in autonomous? And what we can expect in a number of years there, and or advances in battery technology. Some of the key things that I know investors are excited about for this company when they're buying the stock now.
Battery technology, I think you may get greater clarity from them in terms of the development there. Remember, they're working on their own cells out in the Northern California area. And in terms of autonomous vehicle technology, look, Elon Musk has said this a number of times. Full self-driving, the latest beta, is delivering what he calls promising results. Now, is it to the point where these vehicles can drive themselves wherever you want to go? No, it is not there. And skeptics say it's not going to be there for a number of years. He will get a question about this tonight on the analyst call. There's no doubt about that, especially given the accident down in Texas and the investigation that's going on down there and questions surrounding autopilot. What he is likely to say, based on listening to a number of these calls, David, he is likely to say, we believe in the technology. We think that it's going to be ready at some point in the future. Is he going to put a timeline out there? I doubt it. He's just going to say it's getting closer and closer and closer.
Yeah, I'd imagine China's going to come up pretty heavily, too, given the fact that Tesla's coming off of a kind of, at least from a PR standpoint, a bad week in that key market as well. The other piece to this, though, that I think is kind of fascinating, I wonder if you think it's going to come up as well in the call, is the auto insurance piece of this. Tesla launched its own offering. In general, we're seeing greater disruption. Lemonade, for example, recently announcing that it's getting into car insurance, too. What that opportunity, especially as you do see potentially autonomous driving in the future and everything that involves, what that can mean for Tesla.
Well, they've talked about that being the real game changer, the fact that their vehicles will be safer and they'll be able to show that they are safer because autonomous technology will mean the vehicles will not be making the mistakes that human drivers make. And therefore, the insurance should be reflected in these vehicles. They have talked about the great promise of their own insurance as they offer it. But because it's such a small part of this company, relative to vehicle manufacturing, relative to energy storage, it does not get much attention on these analyst calls. It may get a question today, Morgan, but I doubt much beyond that.
Speaking of questions on the call, Phil, I mean, people snickered about the SNL promo, which was dropped over the weekend, but there is a discussion going on about to what degree this is an opportunity, at least from a marketing standpoint.
Sure, absolutely. It's a great marketing opportunity. Look, I think there are probably some people who look at Elon Musk and they say, yeah, he's the guy behind SpaceX and Tesla. He's a genius. I don't know a whole lot else about him. They may not have a full appreciation for what his personality is like, and that's what's going to show on Saturday Night Live, or theoretically what should be showing on Saturday Night Live is his personality. And so from Tesla's perspective, this is a great opportunity for them to say, hey, here's the guy who created us, and this is what we're all about.
Yeah, I'm trying to think with the last CEO who hosted the show. It's going to be something to watch, Phil, on May 8th. Thanks, Phil LeBeau.
Cannot wait.
Tesla's print tonight. Coming up on Tech Check, don't miss Palantir's co-founder, VC Joe Lonsdale, on a busy week for tech earnings. That starts at 11 a.m. Eastern. And then this week we'll have an exclusive with Sanofi's Paul Hudson on this new deal with Moderna to make up to 200 million doses. That's Wednesday at 10 a.m. Eastern time. We'll be right back.
Shark Tank, tonight starting at 8 Eastern. CNBC.
Higher to start the new trading week off with the S&P 5.
Here.
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 It's personal. Welcome back to Squawk on the Street. I am Dominic Chu. Stocks are mostly higher to start the new trading week off with the S&P 500 within striking distance of a fresh all-time record high. A lot of redundancy there, but as you can see behind me, the consumer staples are relative laggards from a sector perspective, while those financial and energy stocks extending their year-to-date dominance of the overall index, both up more than 20% for the start of 2021. Now, within that financial sector in particular, we are seeing notable gains in some of the credit card issuer-type banks. Discover Financial hitting a fresh record high of its own after getting upgraded to buy by analysts at Bank of America. American Express, Capital One also moving higher there as well. As you can see there, good moves. Worth noting, Capital One is among the top gainers in this sector year to date, already up 40-some%. Elsewhere in the financials, tracking strength in banks, especially the regional ones like Key Corp, Citizens Financial, Fifth Third Bank Corp, among others. So credit card issuer banks, regional banks, check those out, and I'll send it, Morgan, back over to you guys.
All right, Dom Chu, thank you. April, meantime, is Financial Literacy Month, and CNBC is committed to sharing messages from business and thought leaders about the importance of financial education. Here is VaynerMedia CEO Gary Vaynerchuk.
I think we need to completely revamp the education system. We have a macro system that forces many of them to go into debt for higher education, which is supposed to give them a diploma that's supposed to be an ROI positive execution. That has collapsed in this modern generation. We're completely delusional as a society of how to set up kids for success financially.
Looking ahead. Squawk Box, 6 Eastern. Watch Squawk Box anytime on demand.
Welcome back. The latest team of astronauts arriving at the International Space Station just after 5 a.m. Eastern Saturday morning, following another historic SpaceX launch on Friday that utilized both the reflown rocket and capsule. The 4 members of NASA's Crew 2 mission entering the orbiting station after the Endeavour capsule
arriving
autonomously docked. And now it's cramped. Quarters with 11 people currently on board, nearly double the typical number, the biggest crowd in more than a decade. Sleeping arrangements getting creative as well, including the use of those 2 SpaceX Dragons attached to the ISS right now. It won't last long, though, as the 4 members of the first operational SpaceX Crew mission, Crew 1, who've been in space since November, come home on the Resilience capsule Wednesday. That is a splashdown that is expected to happen in either the Atlantic Ocean or the Gulf of Mexico around 12:40 p.m. Eastern. So I'll be keeping an eye on that, David. Meantime, Elon Musk over the weekend.
Wait.
Announcing-
Sleeping arrangements are getting creative on there?
Yeah.
That's interesting.
Temporary sleeping
knows?
arrangements.
Could be a
the
reality
commanders
show.
Sleeping in the capsules. Meantime, Elon Musk getting ready to do SNL on May 8th.
Should be fun.
It should be fun. There's so much to talk about there, I guess, with him. Anyway, meantime, it's going to be a busy week. That's going to do it for us here, though, on Squawk on the Street. Tech Check is going to start right now.
Happy Monday. Welcome to Tech Check. I'm John Fort with Carl Quintanilla and Deirdre Bosa. Today, tech gets put to the test as a big week of earnings kicks off. Alphabet, Microsoft, Facebook, Amazon, Apple all on deck. And then Apple's controversial privacy settings go into effect in iOS 14 today, while Facebook is arguing small business is going to be most inconvenienced. And later, Elon Musk precedes his SNL debut with earnings after the bell today. We'll tell you what to expect. This out. Deirdre.
Well, Tesla is certainly in focus, up slightly this morning ahead of those results. And don't forget about crypto. Bitcoin showing a little bounce back of its own after a steep drop over the last week. Overall, the NASDAQ, though, lagging behind the rest of the market today. Carl, perhaps this is the calm before the storm.
The storm's definitely coming. As John said, the most important thing in tech today, or at least this week, is going to be earnings. We mentioned most of the lineup earlier on, but in short, it's the 5 biggest tech companies in the world, plus Pinterest, plus Twitter, plus Tesla. Apple, of course, record growth, or getting record growth for most of these names during the pandemic. But Apple, John, by some metrics, has lagged some of them. And I know you've been kicking around a bit this heightened commitment to jobs and investment in the U.S.
Yeah, there's a press release out, and we always tend to sniff at press releases. I think they're doing a bit of a stretch calling this $430 billion an investment, but it is spending in the U.S. And some of these numbers are just important to let sink in. 3,000 jobs in North Carolina alone, billion-dollar campus that they're building out in the Research Triangle, which is an important technology hub, has been for a long time. But at this time, coming out of a pandemic, when so many states and communities need investment, that's important. They go on to list a number of other things that they're doing, spending in California, Colorado, Massachusetts, Texas, Washington, Iowa, red states and blue states. This is a time when big tech is under a lot of pressure. And this type of spending, I'm not going to say it buys you a lot of friends, it earns you a lot of friends, though, when you're actually contributing as much in tax dollars as Apple has been over the last 5 years, $45 billion in corporate taxes, Deirdre, and also building in these communities.
Yeah, we've seen, similar announcements over the years, investments in terms of jobs from Amazon. The tax story, a little bit different there. But Carl, when you look at purely revenue growth, and we take a look at the busiest week this week ahead with the 5 mega caps, Apple revenue growth over the last 5 years, 17%. You compare that with an Alphabet rising 143% over the last 5 years. Kind of puts it in context. I'm looking to Amazon as well. Last quarter had its first $100 billion revenue quarter, expected to do it once again at a time when we're seeing some leadership changes over there. Andy Jassy expected, or he will be taking over in the third quarter, Carl.
Yeah, all responding to various dynamics regarding the macroeconomy, guys. In Alphabet's case, it's definitely, for instance, the ad market, the travel market. Amazon, we're beginning to see some signs, John, of e-commerce maybe ceding a touch of market share as the economy opens up. And then as far as hardware and PCs and Apple, it remains to be seen to what degree the enterprise remains a source of demand as these IT budgets get reinvented.
Yes, indeed. And let's stick with this. Bring in Palantir co-founder and tech investor Joe Lonsdale. Joe, I take it you're in Texas?
This is my office in Texas, Austin, Texas.
Yeah, well, let's talk about Apple. Their growth compared to some other companies in that big tech space, not as big, but hey, look at their revenue, look at their profitability compared to others. It is impressive, and they're investing outside of Silicon Valley, including really close to where you are. How do you gauge the importance of these companies to the economy taking into account not just their stock prices, but also where they're spending?
Now, Apple is very important for America. This is why there's a bit of a dialectic here where there's, two different sides to this argument. On one hand, there's all sorts of abusive practices where they become a monopoly and they could do what they want, and they could really cause problems for people that are very unfair as a huge part of our economy. On the other hand, you want a strong Apple. You want strong big tech companies for America, because if they win, it benefits our whole country. So you don't want to come swinging at these things in a way to hurt them. You probably do want to hold them a little more accountable for some of their sketchier behavior, given they're such a big part of our economy now.
Joe, good morning. It's Deirdre. Now, you also
Netflix.
said in our
Got that
pre-notes
Netflix
that
now,
these companies
baby.
are fine bets if the government
Netflix and
lets
chill.
them exist. Do you expect regulatory scrutiny, regulatory pressures to start to weigh on shares this year? I mean,
Alphabet Class A, that's what I got. Think about buying more. Let me know if you think I should buy some more.
These
Alphabet
guys are
Class
really
A
good at playing
stock.
regulatory game.
Damn,
When you're
we
a
should
big
have got more of
company
that.
It was that large and that successful. You're going to have thousands of lawyers, and you're going to be really good friends with everyone running things in DC. And so these guys are playing the game right. The question is, are the regulators courageous enough to step up and force these guys to behave? Are they willing to force the App Store, which is clearly a utility for our economy at this point, to have clear rules that they don't change on people, so people invest millions of dollars and then suddenly they change the rules? There's all sorts of ways in which it's unfair for small businesses, it's unfair for the innovation economy, for them to be able to have this utility and then just treat people however they want. So I think you are going to hopefully see the courage to come at that, and that's going to, and hopefully they do it in a way that keeps Apple still strong, because we want Apple to succeed for our economy. But not holding the big companies accountable, whether it's free speech, whether it's the press, whether it's these app platforms. That's going to be dangerous if we don't do that.
Joe, I wonder.
Says volume good at 40.
You've been thinking about the degree to which there are pockets of the market where valuations have really been hurt badly in the last 3 or 4 months in mobility, and obviously SPAC issuance has come to a halt. But it seems to be masked by the continued enormous size of these giants in which money is passively invested. And I wonder if you think it's clouding things about the economy or the market that we should be paying closer attention to.
The last 10 years, people get stuck. When the trend goes on for a long time, you get very complacent about it. The last 10 years has been extremely good for the big tech companies, the big tech monopolies. They've basically grown to the point where they're dominating the entire economy. And a lot of people are assuming that's just going to keep going for the next 10 years. I think there are areas where the moats are very, very high with these big tech companies, but there are a lot of challenges, a lot of change, there's a lot of shift in spend, in a lot of new areas around the enterprise that the market's not really pricing in yet.
Pick the winning horses.
And Joe, we're talking about investing really writ large. I want to ask your take on capital gains. Now, capital
got that
gains
Qualcomm.
hike, perhaps. Now, some would say that if this hike goes into force, and I don't know if it's good policy or not, but that it'll destroy Silicon Valley. Do you agree?
35.
It will definitely harm the innovation economy. I think there's a few key things here. Number one, like the way to maximize revenue with cap gains, this is a bipartisan study, is somewhere around 28 or 30%. Putting it at 43% just takes less revenue just to punish people. Who are you punishing? Well, a lot of people you're punishing are the employees who are deciding, do I go work for the big tech companies and just get a bunch of cash each year? Or do I take a bet on a new company? Do I build something in the innovation economy with my skills? And if you have a cap gains rate that's lower, then that is an incentive to go and help build something new. Whereas if you're going to be the same anyway on income and cap gains, you might as well go make $3 million a year at Google. And it's actually a much better deal at this point to go to the big company. So yeah, it definitely helps the big companies. It hurts us who are trying to build new things if you make the cap gains rate really high.
But those big companies are also in Silicon Valley, so it sounds like Silicon Valley won't be wiped off the map.
Well, it depends who you think of as Silicon Valley. One of the reasons I'm in Texas right now and not Silicon Valley is the culture there has shifted a lot, where you get a lot more risk-averse people. When you have hire tens of thousands of people at Google, Facebook, Apple, Oracle, you get a lot more builders building things all around the country. So I think you might really hurt the innovation economy in this country if you're not careful with the incentives.
Right, and Joe, you're far from the only one that has left Silicon Valley over the last few years. Before we go, though, I do want to get your take on crypto. You've said that gold is a safer store of value, versus Bitcoin. Is that right now? Do you see that being the case for the long term? We are seeing Bitcoin rebound sharply this morning, but of course, volatility is the name of the game here, right? We should be expecting this.
Bitcoin is a bet, Deirdre, that the emperor has no clothes, right? Bitcoin is a bet against crazy Fed policy. It's a bet against overregulated financial system where all the smart people are leaving the banks. It's a bet against a centralized U.S. system. And so I think Bitcoin's very risky. If you're going to be a retail player, you shouldn't put all your money into it. But it's a bet that a lot of us are excited to make because this is a time when it's pretty obvious the emperor does have no clothes. There's a lot of ridiculous stuff going on, tons of money being thrown around in very sloppy ways. And Bitcoin's a way to opt out of that system. So a lot of people are making that bet right now.
Joe, there seem to be tiny examples where it's being accepted as a payment mechanism in these small pockets of the economy. There's an NFL player today who tweets he's going to immediately take his salary and convert it. Is there a corporate where if they did say we're going to accept as payment, it would truly turn your head?
Well, I think Elon said he's taking it for Teslas, which I was pretty excited about. I think that the bigger thing that's turning my head is when I have friends whose family gets $600,000 for their restaurant, and then they already fired everyone, so they pay their family and friends, and that's allowed. And there's just money being sent around like crazy with the policy right now. And the Bitcoin is fundamentally a bet against that system. It's a bet against the fact that we have a centralized financial system run by crazy people. So they just pay their family and friends, and that's allowed. Elon said he's taking it for Teslas, which I was pretty excited about. I think that the bigger thing that's turning my head is when I have friends whose family gets $600,000 for their restaurant, and then they already fired everyone, so they just pay their family and friends, and that's allowed. And there's just money being sent around like crazy with the policy right now. And the Bitcoin is fundamentally a bet against that system. It's a bet against the fact that we have a centralized financial system run by crazy people at the moment. And so whether or not it's the last administration or this administration, a lot of us think that the government should not be in charge of this. And so that's why Bitcoin is so popular. It's why it has a really good chance of being something big.
Right. Joe, that's good stuff. All provocative, and we love having you help us kick off the hour. Please come back soon.
Appreciate it.
Joe Lanzio. SNL, meantime, announcing that Elon Musk, as you might have heard by now, will host SNL on May 8th. This is your chance to get in the writer's room. We want you to tweet us at CNBC Tech Check with your best joke for Elon's monologue. You can scan the QR code on the bottom left of your screen that takes you to our Twitter feed, and we'll show off some of the best answers later in the show. Who knows, John? Maybe the writers actually incorporate some of that.
Well, all of his jokes are going to be cleared by the SEC, so it's going to be great. And now it's Apple versus Facebook, but Facebook says it's actually Apple versus small business. That's next. Tech Check is just getting started.
This is the gap that opened up when everything shut down.
Silver Comics panel.
But entrepreneurs never stopped.
Copper.
And found solutions that kept them going. At
Corn,
US
wheat,
Bank, we can
soybeans.
help you adapt and evolve your business, no matter what you're
Soybean oil,
facing.
soybean meal,
Because when you close the
oats,
gap, a world
rough
of
rice.
possibility opens.
$13.77. Live
US
cattle,
Bank, we'll get there together.
feeder cattle.
I look
Tesla,
for the WELL
baby.
Health Safety Seal at my favorite places.
It means health and
Humbug.
safety measures have met rigorous scientific standards. Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going in.
Commodities. Even orange juice.
The company we've trusted to keep us working remotely is the same company we'll trust to bring us back together.
The firm says it still has the best long-term growth story in its reopening basket, but
direct email list, and Facebook is offering its users tools to support local businesses with a businesses nearby feature on Facebook, as well as its Facebook Shops tab. It also has a small business people are very unlikely to opt.
1x4. 2x.
Record. And the CEO of British Airways says that the U.S.
Yep, and time now for a news that
Ahead. Squawk Box 6 Eastern. Watch Squawk Box anytime on demand.
Welcome back to Tech Check on CNBC. I'm Carl Quintanilla with John Ford, Deirdre Bosa, where we cover the biggest trends in technology and business. Stocks mostly higher. I don't know if you noticed, but the NASDAQ is the highest since February 16th now, about a 2-month high, not far from an all-time high after that. Chip names at the top of the list. Skyworks, Xilinx are the top performers. Viacom, CBS is a bit lower. Moffett did cut it, but upgraded it earlier to neutral from sell.
Yep, and time now for a news update. Rahel Solomon has that for us. Rahel, over to you.
Hi, Deirdre. Good morning, everyone. Elevator maker Otis Worldwide is writing a strong earnings report at the top floor. Shares are up about 7% and have hit a new record high since the company was split off from United Technologies last year. The U.S. Supreme Court asking the Biden administration for its views on whether Volkswagen can be sued by local governments. That's for damages resulting from the car maker's emissions cheating scandal. Shipments of recreational vehicles in the first 3 months of the year surging to a new record. First quarter shipments were 10% above the previous high. March shipments also set a monthly record. And the CEO of British Airways says that the U.S. and the U.K. have a, quote, great opportunity to open a travel corridor between the two nations due to their high vaccination rates. The comments come a day after the head of the European Commission said that fully vaccinated Americans will be able to visit the EU in coming months. So perhaps a little Paris in the summer, John. I don't know. Sounds good.
That does sound good.
Nice to have the option at least.
Yes, yes. And now, guys, let's talk some Tesla. Earnings coming after the bell this afternoon, and the street is split. Just last week, Citi reiterated its sell rating on Tesla, while Goldman stood firm as a buy. And that after a rocket ship 2020, the stock was up more than 700% for the year. Shares up marginally for 2021, about 3%, underperforming the S&P overall. Carl, it's hard for me to know whether this stock is moving based on just risk appetite in general, something else. I mean, how do you stomach that 700% rise and then know where it goes from here?
Yeah, I know. There's so many cross currents. Obviously, there's domestic security concerns, some new headlines about legislators trying to address driverless technology. You got, obviously, the chip shortage, is a big issue. And then you got China. And Morgan Stanley's Adam Jonas last week said that the market needs to understand that their position in China, in his words, are going to be diluted over time, where local players are encouraged. That's just how it works over there.
Right, at the same time, though, you've got manufacturing ramped up in China. You're sort of losing some of those Model X and S sales, which are higher margin, going towards the Model Y in China. But you have to wonder if manufacturing and that ramp up really helps there. And John, when you talk about Tesla becoming, justifying these enormous gains, right? The bulls believe that it's more than a car company. And there's a lot of excitement, at least there has been, over full self-driving, that feature. And could software really start to contribute, be a huge driver of revenue growth going forward? You got to wonder, does the accident in Tesla pour a little bit of cold water over that? Not for this quarter necessarily, but for the year ahead, if Tesla can start to really monetize that full self-driving feature.
Well, I just want to go back to that point you just made about Tesla manufacturing in China and why that might matter. I think you're exactly right. Take a look at how Apple has fared. The fact that it's got so much assembly in China, the fact that it's got retail in China, it's managed to power through despite so many, nationalist, other political types of headwinds that other companies have suffered. It helps when you employ people, when you're creating jobs, as Apple knows, apparently in China as well as in the U.S. with this announcement this week, Carl.
Yeah, well, obviously it's just one part of the story this week, John. Wednesday and Thursday nights are going to be crazy this week.
They will be. We will be very busy. And guys, speaking of Tesla in China, right, huge cult following there. But fanboys in China, they're starting to have some wandering eyes. So our Eunice Yoon visited the Shanghai Auto Show, explains.
Carl, Tesla has come under fire in China recently, with state media and the Communist Party calling the company arrogant. So we followed 2 Tesla owners at the ongoing Shanghai Auto Show to see what might break their loyalty to their beloved car brand.
Xavier Zhang and David Deng are Tesla fanatics. They've come to the Shanghai Auto Show to see if any of the many Chinese Tesla wannabes can stand up.
Do you like it?
Deng works in finance, Zhang in IT. Zhang bought a Model Y as his first car and dreams of upgrading to a Tesla Roadster. Deng loves his Model 3 so much, he sleeps in it. On their list, established car maker Geely's new Zeekr 001.
What do you think?
It reminds me of a Model 3, he says, like that's the standard. Next stop, the ET7 by New York listed NIO.
The height is low to the ground, so I think when I drive it, it will feel like a roadster.
Looks like a Model 3. Some EV makers didn't even merit a visit. XPeng was passed over because Zhang doesn't like the company name. But he did find a car he does like by newcomer Wei. Tesla has problems with panel gaps. It's gotten better, but not like this, he says. That said, to judge a car, you really need to know how it drives. So after a day kicking the tires...
They're all good, but I still choose Tesla for now.
You still choose Tesla?
Yeah.
How about you?
So good. I think you need to buy one Tesla.
So despite official criticism, there is a reason the Model 3 was the best-selling electric vehicle in China last year. Carl?
That was a great spot. Eunice Yoon in China. Eunice, thanks for that. In case you missed it last night, Facebook's Oculus and EA split an Oscar last night at the Academy Awards. First time for a video game. Well, you can read more about that only on CNBC.com. And also find out why GameStop CEO is not the only one walking away from the company with millions. More on that next when Tech Check continues. It calls for the accelerated vesting of over 1 million shares valued at about